Hey, if you're currently in a capital raise or you're about to get going on a capital raise, these are the top three things that I teach my coaching students to do to make their raises infinitely more successful and to reach their goals so they can close the deals that they want in real estate. Hey everyone, it is Amy Silvis. Welcome to another episode of Raising Capital for Real Estate Investing. As I mentioned, I am your host. I'm the founder and CEO of Silvis Capital, and I love to teach folks how to raise a lot more money for their deals, especially giving you all tips and techniques that have worked for me for the tens of millions of dollars that I've raised in real estate, and of course for my students as well. I've been doing, in addition to my course that you all know about, my 8-week on-demand course called LinkedIn Capital Raising Secrets, I've also been doing a lot more one-on-one coaching, which I really love. It's a lot of fun to really dig in deep and understand people's systems, processes, and what kind of is going on under the hood of their capital raising business to see where they might be able to improve. All of us can, right? All of us have areas of opportunity. So, but anyway, it's these one-on-one coaching sessions that I've been doing lately that have got me thinking about some of the patterns that I'm seeing in these sessions that I want to share with you all so you can make your capital raises that much more successful. As a kind of starter here, I want to go through our 4 phases of capital raising. I know we kind of glance over it in our coaching episodes, but it's been a while since we've gone through this step by step. And then, of course, we'll get into these 3 tips that I have for you that you're going to love. But just as a reminder, and again, I'll show you where this really fits, but everyone falls into one of these 4 phases. The first phase is you're a true beginner. You're in the fear zone. You haven't really had much success raising capital. You're really scared. You kind of feel like an imposter. You're scared to ask your friends and family to invest. You've got very little deal flow, if at all. You definitely don't have any systems or processes in place. You're pretty pumped. You're really excited, but that's really fragile and it's unfocused. The second phase is pipeline purgatory, where you've raised, 1 or 2 raises and you feel really confident, but that soon fades because your friends and family have become completely tapped out. And you're thinking, uh-oh, what do I need to do next to raise capital? Because my friends and family are tapped out. Maybe you've tried traveling to conferences and you've spent a whole boatload of money traveling to conferences only to realize that talking to people one-on-one is not getting you the volume of investors that you need. And maybe people are even trying to raise money from you at those conferences. Maybe you've got the beginnings of a CRM, but you don't really use it consistently. And that's really hurting your ability to forecast the amount of capital you can raise. You had some early confidence, like I said, but now forecasting your capital raising feels really, really tough. Maybe you have some deal flow here and there, but it's definitely not reliable. And you've tried doing social media because you realize, oh gosh, I need to raise from strangers. But what you're doing on social is just really not working. You're not building those new relationships with strangers that you know that you need. Phase 3 is bottleneck breakpoint, where you're raising capital consistently and you feel really confident, but the amount that you're raising has plateaued and you want to dial up that number. You've got leads that are interested, but they don't always wire when it gets down to it. You've got deal flow, but it still doesn't feel as consistent as you want. You're noticing, if you're truthful with yourself, that your investors go cold in between deals because of these nurturing gaps. And you're really tired of manual follow up because you don't have a system or a process. And then the confidence zone is where capital raising feels predictable and each raise grows in size. You've got this reliable deal flow and consistent growth. Your systems are professionalized with automation and investors are nurtured consistently between deals. Lead gen runs on autopilot and you've got great community. You've got great brand reputation. And the capital raising that you do supports your lifestyle. It's scalable, it's fun. So today's episode is really focused on those of you that are in pipeline purgatory phase 2 and bottleneck breakpoint phase 3. So maybe you're starting to raise capital above and beyond friends and family, maybe you've just started to think through that. Maybe you've done it a little bit, but you want to scale it more. I'm going to give you this caveat as we go down this journey here on the tips, the top 3 to really improve your next capital raise. Nothing is going to overcome not enough leads. So I'll just tell you that right off the bat. We can do all of these tips and tricks that I'm going to give you, but if you don't have enough investors in your CRM, if you don't have enough leads that have capital, we can only squeeze so much out of a limited number of people. And I'm not saying capital raising is squeezing out of people, but I'm just trying to give you that visual because I do have people that come to me consistently saying they want to increase their capital raising capacity. I look under the hood and yes, are there things that can be done in the middle and the bottom of their funnel? Absolutely. But those improvements won't be enough to overcome their lack of new leads. So that is where our course comes in. You all have heard me talk about LinkedIn, but there is no more fast, efficient way to get strangers to invest in your deal than LinkedIn. So plug for our 8-week on-demand course called capitalraisingsecrets.com. That link is here in the show notes. So you can check that out if you'd like. And if you don't have enough leads, that is where to start. But if you do have enough leads, or maybe you're working on that and you want to make your next capital raise that much bigger, better, faster, stronger, here's where we're going to start. So the first tip for you is when someone enters your CRM, let's say you're on LinkedIn and someone reaches out to you and they say, "Hey, Amy, look, you're talking about my complete fear of, being laid off in my 50s. And it's going to be really, really tough for me to find another job that pays well. I know the statistics around that. And it is time for me to start another stream of income. And I want that to be through real estate. And I want to follow what you have going on and possibly invest alongside you in your next real estate deal." When someone says that, you all have a conversation, or you give them a lead magnet, or you just enter them in your CRM. There's lots of different ways to design this funnel. The first thing I want to make sure that you do is you have a questionnaire for this investor. And this serves a dual purpose. The first is for compliance. And yes, you may be saying, "Amy, I only do Reg D 506C, as in Charlie. I only do deals for accredited people." Totally understand that. But if you happen to do deals for non-accredited folks, this is going to be incredibly helpful. But then it's also a great reference point for you to be able to talk to people about themselves. So, what's on this investor questionnaire? Well, I'm just going to give you a few things because we don't want to inundate people, but it's incredibly important for us to understand first what kind of investments this prospect or this potential investor already has. Are they brand new to real estate? Do they have some real estate? Are they just in stocks and bonds and mutual funds? Do they have other alternative investments? That's a great question to ask. What are people's goals? Are they looking for tax benefits? Are they looking for cash flow? Are they looking for appreciation? Are they looking for diversification? Then taking a look at what their risk tolerance is. Are they willing to be extremely risky? Are they terrified of their own shadow? Are they in the middle? But understanding these 3 things not only helps you understand if this person is right to invest in real estate, because, hey, I understand we all want to get enough investors for our deals, but it's also our job to make sure someone is appropriate to invest alongside of us. There are terrible consequences, not only morally and ethically, but legally, if someone invests alongside of us and this isn't a good fit for them. So that will give you a great idea and kind of assessment. Let's just say, they've never done this before. They don't understand real estate. They're absolutely terrified of risk. All their money is under their mattress at home and they're non-accredited. That might give you pause. That should give you pause to say, "Oh gosh, is this really the right place for this person to invest? Are they better off looking at a CD or a savings account as opposed to investing in a private placement commercial real estate deal?" The other thing is this gives you an ability to help people identify which investment opportunities meet their criteria. So let's just say you're getting ready for a capital raise. And I go through this with my one on one students all the time. But how are you letting your investors know that this opportunity might be a good option for them? I hope your answer isn't you're sending the exact same email to every single person in your CRM. If that is your answer, oopsie, you are missing out on a big opportunity because if you've got people that are looking for cash flow and you've got a heavy appreciation deal, that deal might not be for them. But my goodness, if you're sending the same email to the people that want tax benefits, cash flow, and appreciation, and you're not customizing, you're not segmenting your CRM so that people understand how your opportunity fits their goals, oh, you're missing out on a big opportunity there. And you may be saying, okay, isn't it obvious? I mean, I'm talking about each one of these things in my marketing emails, in my webinar. Yeah, but y'all, we need to realize we do this all day, every day. We are intimately familiar with our investment opportunities. We are inundated with a ton of other things in our inbox. It behooves all of us to really spell it out to each one of our investors. Hey, XYZ investor. Hey, Todd. Let's just use Todd. Todd, you told me you want cash flow. Guess what this new opportunity has? Cash flow year one. Here's what it is. There's no selling involved. This is truly, you mentioned this was your goal. I have the solution to your goal. I have the solution to what you're looking for. Here's what this looks like. Let's go. All right. So we're gonna keep track of that along with how much folks want to deploy, how much capital they're looking to deploy in a given year, and how much they've already allocated. So let's say we're in November and you have a deal in November, and Anna told you that she was looking to deploy $200,000 in 2026, and it's November of 2026, and you check in with her and she said she's only deployed 100 grand, but her goal was 200 grand. Guess what? You have a solution to what Anna is looking for. So it is incredibly important that you get to know your investors that intimately because we're in the business of helping connect people to solutions and helping them reach their goals. But if we only know that they're interested in real estate and that's it, that's the extent of it, we're not going to be able to customize and best serve our potential investors. So getting this survey completed once someone enters your CRM and letting them know, hey, this is something, if you want to be a part of our club, that's great. I would love to have you, but I need to get to know you a bit more, not only for compliance reasons, but also so I can make sure to match you with a deal that fits what you're looking for. Okay, number two, when you're in a raise, I want you to create a very simple Google Sheet or Excel spreadsheet exported from your CRM that has every single one of your investors that qualifies for a deal. If it's a deal that's for just accredited folks, if it's a 506C as in Charlie, make sure just your accredited folks are on the spreadsheet. And your goal during your capital raise, well, first and foremost, your goal is to be able to do a webinar, get folks invested in your deal without, having to necessarily reach out excessively one-on-one, right? I hear of people in this space that are texting, calling, and oh my goodness. Okay, that's a deep breath. That's a lot of work. That's something we can work together to fix. That shouldn't be the mainstay of your capital raising. But I would like for you to do this exercise of getting every person to give you a yes or a no for your given deal that's in your CRM. So every investor, it would be fantastic if you were to hear from them, whether it's a survey, whether it's through feedback that you send in a marketing campaign, whether it's a text or a one-on-one call, to give feedback to you on the deal. Are they in? Are they out? But we want to hear one way or another from every person in your CRM. And why is that? Well, it's important to get people off the fence. And it's okay if we're chasing no's. I mean, I have some students that I tell them, look, we need to go find those no's in your list because that means we're one step closer to finding a yes for who wants to invest in this given deal. These people who are unresponsive, that's an important data point for you all to have when you're raising capital, because the assumption is if someone raised their hand and said, yes, I want to be in your investor club. Yes, I want to hear what your upcoming opportunities are. And then they go dark on you and then they're unresponsive. We need to figure out if this person is no longer interested in hands off real estate investing. And it's okay if they're not. The last thing we all want to do, y'all, is spam people with opportunities that don't fit what they're looking for. If you're spamming people, I promise you, you're never going to get them and shoehorn them into a deal. We don't want people who don't want this. That doesn't make sense. That's not good for anyone. That's a waste of your time. That's bothering them. So having a conversation with, hey, you let me know that this was a goal of yours. Have things changed? That's something you can say. Are you no longer interested in this vehicle to achieve whatever they told you? Buy back your time, mitigate taxes, have another stream of income. Is that no longer something you're looking for? The expectation when someone is in your investor club is that there is communication, that there's not ghosting. This isn't some mass cattle call, right, of investors. That's not how our investor club works. So setting that expectation to your investors that it is a privilege to be notified of these private investments that you curate and you don't mass market them, or at least I hope you don't. They're available to your investor club exclusively. So if that's the case, then if you reach out and they told you they wanted to be on your list and they told you that they had a goal that real estate could help them achieve, and they're not saying anything, that means you should talk to them on the phone, or there should be a text conversation or email conversation to see if their goals have changed. And hey, if they have, remove them from your list. No harm, no foul. Wish them all the best. This is not confrontational. People's goals change. But some people may say, hey, this isn't the deal for me. Or some people may say, I invested in something else. Great. All of this data is incredibly, incredibly helpful. Things happen why people don't invest. It's great for you to find out that information. So what I tell my students is, it's great to get an investor, right? Yeah, invest with us, invest in this deal. Yay. But if someone says no, then it's such a great opportunity to get some data from them. What are you looking for in the future? Help me understand what about this deal doesn't fit what you're looking for so that I can find something in the future that does fit what you're looking for. You signed up for this investor list. You have this goal of increasing your net worth, of mitigating taxes, whatever. It sounds like this deal doesn't fit what you're looking for, but it's my job to find something that does. So can you help me understand what you'd like to see from me in the future? That's a gold mine of information, because they're not only going to confirm with you what their goals are. Sometimes goals change, but they're going to give you information about another deal that they're looking for and what those characteristics might be like. And guess what happens when you get that deal that fits what they're looking for? Boom. That should be in your CRM. You should segment people accordingly, right? And then you're going to be able to tell them, hey, a couple months ago, you told me you were looking for this. Ta-da, here it is. You're much more likely to fill your deal up because you know exactly what your investors are looking for, and you found something that helps them get to their goal or helps them avoid some sort of pain point. Last but not least, and this might not seem incredibly profound to you all, but when you're launching a deal, I want you to host a live webinar. I didn't even realize candidly that this is a trend in our industry for people to record webinars and just send them out to play so people can play whenever. Here's why I'm not saying it doesn't work, but why it's way more effective for it to be live. We are in an era of social media where people are using AI everywhere, where automation, a lot of relationship is being lost. And when relationship is lost, that trust factor is lost. And there's no better way to build a relationship. Obviously, having a one-on-one conversation on the phone, in person, over Zoom, incredibly helpful. But you can also build a relationship on a webinar that's live. If it's recorded, there just isn't as much interaction. There's not an opportunity to do question and answer. There's a lot that's lost, and especially if you do it with your business partners, so folks can see your relationship, your interaction. I truly think it is a tiny investment of time and effort for a wildly large return on investment. People want to feel like they know you, like you, and trust you, of course. If everything is a asynchronous communication, whether it's a recorded webinar, whether it's an automated email, whether it's a text message, it's tough for to really build or maintain that relationship. There's something about a live webinar where people know it's actually you in real time, interacting, taking their questions, talking through, chatting it up. There's really nothing that replaces that. And yes, is that going to overcome a bad deal? Of course not. That's not what I'm saying, but people make decisions with emotion, even if they're not conscious of it, even if they don't realize it. And they take competency cues, they take warmth cues, they take trust cues when they see you live and they know if they have a question that can answer it and you're going to be able to address it in real time because you're that competent and knowledgeable of a deal. So don't miss that opportunity. And look, can everyone attend a deal live? No, they cannot. They can't. So record it, of course, but encourage people to attend live. Give folks the option. Send out the recording later, of course, but don't mention that there's going to be a recording later. Just that's another little trick. Just tell people this webinar is happening so they're encouraged to attend live and build that relationship. It really goes very, very far. Okay, I hope you all enjoyed these 3 tips. I'm amazed my voice kept up. I caught another virus. Who gets viruses in July? I don't know. And so I lost my voice, but it seems to be on the up and up. Hey, y'all, we have a lot of people that listen to this podcast, and I'm incredibly grateful. Not all of you have given or written us a review on Apple Podcasts. If you find this information helpful, a great way to say thank you is to take truly 2 minutes and go to the Apple Podcasts and write a review for the show. It means so, so much. We spend a lot of time and effort giving you all as much information as we can to support you in your capital raising business. And that thank you would mean a lot to us. Okay, great talking to you all. Can't wait to see you on the next episode. Bye for now. Hey, real estate investors, fund managers, capital raisers, syndicators. If you are struggling with predicting how much capital you can raise for a deal, because investors say they're going to wire, but they actually back out, you struggle with finding investors beyond your network of friends and family, if you find yourself falling short on your capital raises for your real estate investments, and you're spending thousands and thousands of dollars to travel to conferences all across the country, only to find that the people you're hoping to raise capital from are also trying to raise capital from you, hit the subscribe and follow button, and I promise y'all are gonna love what we're gonna cover here. I'm gonna deliver free content every single week in and week out, to help you get to the next level in your real estate investing capital raises.